Cathie Wood's ARK Investment Management sold more Tesla Incorporated shares recently as the stock continued to decline amid investor concerns about CEO Elon Musk's $44 billion buyouts of Twitter Incorporated. The popular money management business sold 10,035 shares in the Musk-led company valued at $8.8 million. As Cathie Wood is one of Tesla's most prominent champions, investors were surprised. Tesla's stock, which has dropped 20% in the last month, has fallen around 27%, but Wood recently raised her firm's target price. According to Cathie Wood's ARK Investment Management, Tesla Incorporated shares would double to $4,600 by 2026. ARK's updated model was released on April 14th, which is more than 4 times today's pricing. So why would she sell her stake in the leading electric vehicle brand? Keep watching to find out. When it comes to the incredible price history of Tesla stock and the buying and selling influences over the last few years, one name keeps coming up: Cathie Wood. After the electric vehicle maker's well-received first quarter earnings, Cathie Wood's ARK Invest sold over $100 million worth of Tesla, 0.64% shares. Tesla stock was sold for $70 million by the flagship ARK Innovation ETF ARK for minus 0.52%. ARK Invest, based in St. Petersburg, Florida, owns Tesla stock through 3 of its 6 actively traded exchange funds: the ARK Innovation ETF, ARKK, the ARK Autonomous Technology and Robotics ETF, ARKQ, and the ARK Next Generation Internet ETF, ARKW. Before Wood sold 10% of her stake, the 3 ETFs owned 1.31 million Tesla shares worth $1.15 billion. Speculators pounced on Tesla stock earlier this week when Musk refused to reveal the source of funds for his Twitter purchase. The electric vehicle manufacturer is not a party to the agreement, so ARK has been selling Tesla at a profit every time the price rises above $1,000. Wood purchased Tesla stock in January, ending ARK's month-long profit-booking spree when the stock dropped 11% in a single trading day. Earlier this month, ARK Invest raised its price target for Tesla to $4,600 by 2026, up from a previous forecast of $3,000 by 2025. In March, Wood did the same thing, dumping more than $200 million in shares to instead splurge on recently struggling stocks like Coinbase, Zoom, and Roblox, which have dropped as much as 50% this year. 2 of ARK's funds, including its flagship ARK Innovation ETF, sold 52,335 shares of its top holding Tesla, representing a stake worth approximately $57.5 million, while the 3 funds later sold nearly $147.5 million, according to the firm's daily transaction reports. The sales came after Tesla's stock had risen more than 40% over the course of 2 weeks as the broader market recovered from a geopolitically fueled sell-off, and they were ARK's first Tesla sales since mid-January. The New York City investment firm bought nearly 60,000 shares in mid-February after the stock had fallen nearly 30% for the year. Even though Tesla was ARK's best-selling stock, the business also sold approximately $21 million worth of 6 other equities, including Vertex Pharmaceuticals and software company Splunk. As we said, Wood replaced them with a massive position in another top holding, Coinbase, which she purchased for more than $100 million over the same period, and Gen Z gaming platform Roblox, streaming giant Roku, and the former pandemic darling Zoom. Shares of Tesla, which were then trading at around $1,104, were down roughly 12% from their all-time high in November, while Coinbase, Roblox, and Roku are down 19%, 48%, and 42% respectively for the year. So why is ARK selling Tesla stocks again? ARK prefers to trade around a stock's volatility, buying when prices are low and selling when Woods believes prices are about to fall. She expanded on this, saying, "We naturally take profits when we feel like analysts are hyperventilating about a stock, including Tesla, because we know we'll get another opportunity connected with controversy to purchase the stock lower." Tesla held about 9% of ARK's flagship fund, representing a $1.2 billion position, but that's down from a $2.3 billion stake in October, representing 11% of the fund. Some recent reports suggest that ARK Invest's executives opted to dump some Tesla stock. However, such terminology is deceptive. According to further in-depth coverage of the incident, it's a little off the mark. Yes, the corporation sold a little percentage of its Tesla stock, but with only a few fractions of a percent sold, the funds remained heavily invested in Tesla. Moving from 11% to 10% in fund weighting, for example, doesn't suggest you're getting out of certain market equity. It just means that you're reducing a little for whatever reason. It does not necessarily imply that the divesting party is concerned about the stock's future performance. Cathie and her colleagues are most likely using the proceeds from the sale to fund the purchase of new ventures with bigger upside potential. Wood's strategy, which ARK claims focuses on disruptive innovation, has been met with increasing skepticism on Wall Street. Traders betting against ARK's flagship fund made more than $1 billion in January, surpassing their entire haul of $941 million the previous year. Shorting innovation in America is insane, Wood remarked at the time regarding the shorts. Scion Asset Management, the hedge fund led by investor Michael Burry, who famously predicted the housing market crash in 2007, is one of her critics. Late last year, Scion Asset Management disclosed that it holds bearish put options on $30 million worth of ARK shares. Wood first rose to prominence as an extraordinarily foresighted market analyst, thanks partly to her predictions about Tesla before the company's large stock price surge in 2020, 5-to-1 stock split, and subsequent strength and lasting power as Elon Musk's invention. However, after creating ARK Invest in 2014 and purportedly naming these revolutionary funds after the biblical Ark of the Covenant, Wood gained a household name among investors. It's obvious from Wood's early statements on Tesla that one of the reasons she likes the company is the similarities of the two business models, the complementing principles that drove both ARK Invest and Tesla's rise. Both are based on the idea that rapid technological advancement can lead to financial gain. Rather than focusing on a particular technology, they each have a diverse focus and a wide attitude regarding this concept. However, there is another aspect to Wood's early Tesla investment. When asked about Tesla, Wood stated that she considered it a value stock, meaning that it was trading at a discount to its fundamentals. That means Wood thought Tesla's stock had a lot of potentials to run after, looking at its earnings, revenue, and everything else. And it did, over the past year and a half. Her early conviction that Tesla had a lot to offer the market was a big part of why Wood urged Elon Musk to keep the company public while he considered a repurchase, and why ARK Invest made such a big bet on Tesla in the first place. Cathie Wood has made several forecasts on Tesla's stock price in the future. Wood predicted that Tesla's stock would achieve $4,000 per share by 2023 when it was trading for a fraction of what it is now. Remember, this was before the 5-to-1 split. Thus, the post-split equivalent share price was $800, which it reached 2 years sooner than she predicted. The important point is that the transaction analysis and interviews show that Cathie Wood is still optimistic about Tesla's long-term prospects. First and foremost, that proportional sale amounted to 0.26% of ARK's total assets, not a whole lot in the grand scheme of things. So just because Cathie Wood and her team switched a small amount of Tesla shares for another stock, for example, doesn't mean it's a bad thing for Tesla. It simply indicates that rebalancing diversification provides for more potential elsewhere. Tesla's stock had also risen by nearly 800% during ARK's ownership of the company. However, the majority of individuals don't believe that this level of growth will continue year after year. As Tesla's market presence grows, it's more logical to expect the company to mature more traditionally. In the end, it's apparent from interviews that Wood remains optimistic about Tesla. According to Bloomberg, Wood commented following a recent Tesla drop, "Corrections may be helpful. They keep us all humble. Walls of anxiety are erected on the strongest bull markets I've ever seen. That is dedication." As the market season progresses, we expect ARK funds to remain bullish on Tesla as it always has been, especially with new developments on Tesla cropping up frequently. Would you sell your Tesla stock? Comment down below.